Hello friends, last week I shared with you a ratio chart of the Bank Nifty versus the Nifty, and I told you this ratio will determine the near-term trends of the market, and that worked out pretty well. Also, the noticeable thing about last week was the fantastic rally in gold and silver on Friday. Of course, the price was bullish throughout the week, but Friday saw a big blow-off rally. I hope you remember my two videos about bullion being bullish and where to buy the purest quality gold and silver at honest to God prices, how to get it tested electronically, how to get buyback rates, etc., etc. The hyperlink to these videos are in the description below. And now to this week's video. Are election results discounted? Is the market basically shrugging off all worries and proceeding to go higher from here? What does the data suggest? That's what it's all about. My work is all about data and what it tries to tell us. So let's dive right in. On your screen right now is the weekly market outlook, weekly market roundup. And it tells you that it was the broad-based Nifty 50 which led the way up, even though the Bank Nifty did gain somewhat, but it underperformed. The US dollar index, the Dixie, fell marginally, and that was one of the primary reasons why emerging markets, including India, went up. A weak dollar also triggered buying momentum in bullion, with silver being a clear and unmistakable winner out here. Crude oil went up, and it was natural gas again, partly, of course, because you have the European Union threatening to impose sanctions on Russian imports, Russian gas imports. So gas is going up. The Indian rupee strengthened against the dollar because the US dollar index, the USD INR, fell 16 basis points. The Indian 10-year benchmark bond yield fell by 3 basis points at 7.10, and we'll come to that in detail in the video ahead. NSE market capitalization was up a little under 3.5%. That tells you that the rally was fairly broad-based. The MWPL went up to 4174, and that is the highest in many quarters that I remember. And the Dow Jones Industrial Average, Nasdaq and S&P 500 all went up together, providing tailwinds to domestic markets. Friends, let's take a look at the Nifty versus the Bank Nifty performance. You're back to Nifty 50 basically being higher performing than the Bank Nifty over a 4-week period. In the 12-week period, it is the Bank Nifty which outperformed the Nifty 50 where relative returns are concerned. But in 20-week period, you can see that the Bank Nifty has actually returned negative yields. Of course, in all these return periods, if you were to calculate cost of carry, execution cost, commissions and taxes, the Bank Nifty has given you negative returns. And that is why I shared the ratio chart last week. We're going to look at it again this week. Friends, I now come to our in-house exclusive indicators. I start with MWPL, market-wide position limits. This is the extent of limits utilized by traders compared to what is allowed by SEBI. At 41.74%, the MWPL is the highest in many quarters here, which tells you that people are confident that continuity will be seen in the election results, and they are possibly betting that the BJP with the NDA allies might come to power. And therefore, they seem to be building up positions quite confidently. But I've told you before, high MWPL brings with it high volatility, because if something unexpected happens, that many more positions need to be squared up. So volatility is going to be the order of the day. That is something you need to remember. I now come to the index and stock futures turnover. Remember, these are 3 concurrent series. So it is May, June, July. What you are seeing is stock futures turnover fell noticeably, whereas the index futures turnover went to nearly the 20-week period high. That means traders were focusing on relatively lower risk index futures rather than high risk individual stock futures. Stock futures also demand higher span margin and mark to market margins whenever the price turns. So risk appetite seems to be somewhat calibrated here. Friends, I now come to the advanced decline ratio, and this is the average of all trading sessions of the week. And the advanced decline ratio has risen from 0.77 to 1.67. That tells you that for every 100 losers, there were 167 gainers. Now that tells you that buying conviction, at least on an intraday basis, was better and improved after 5 weeks. Now, friends, I come to the Nifty and Bank Nifty prompt month futures basis. What is basis? It's the premium or discount prevalent in the futures compared to spot. Now, higher risk appetite means higher basis, lower risk appetite means lower basis. And a caveat here, just like options premium, as we head closer to expiry, the basis does tend to contract, which is what you saw last week. The basis in both the indices has approximately halved, if not more. And as long as the basis remains positive, I think bulls still have a chance. Negative basis would mean when futures are trading at a discount to spot. As long as that doesn't happen, the bulls still have a possible chance. Now, friends, I come to our in-house exclusive indicator, the impetus. You won't find this anywhere on the internet. What you are seeing is a sharp and noticeable decline in both the indices, which means the markets did go up, both the indices did go up, but buying momentum was not at all forceful. This is the first indication that I'm getting from the studies that we've shared with you so far in this video, where I think election results need not be taken for granted. Now, let's keep a note of this study. We'll obviously take some more before forming an opinion. Now, friends, I come to another exclusive in-house indicator, the lift, weight, thrust, drag indicator. You won't find this anywhere on the internet. You've trusted it for more than 3 years now. Note how the LWTD has been going up since a fortnight in a row. And whenever the markets are going down, the Nifty is getting support on decline. So what the LWTD is pointing with the data that we have entered into it as of now. And remember, this data points that I have taken are only up to Friday. Saturday's session is not something I've incorporated into because it's a one-off session. It's not something that happens every week. So the LWTD seems to tell me that lower levels will continue to see buying support as we stand with the data that we know so far. If at all any unexpected news comes, then we'll have to take it as it comes in the future. Now, these studies that I've shared with you, they are on weekly chart basis. I share them on a daily time period on my social media accounts. Do make it a point to connect with me there. Friends, our in-house study is done. I now come to the bond markets, and what you are seeing is the weekly chart of the Indian 10-year benchmark bond yield. The yield has fallen by 3 basis points. And from lower levels last week, the bond yields have jumped up. Now, the question is, Vijay, should we start to ladder the Indian 10-year benchmark bond yield? Have we missed the boat in the gilt funds that we got out of earlier than usual because the NAVs are rising after we sold, even though we booked a profit? These are two questions about sovereign bond laddering and gilt funds is something that my online family members have been asking me. I have recorded a video 2 or 3 days ago. It's there on my YouTube channel. The hyperlink to that video is in the comment segment below this video and in the description below. Do make it a point. I hope to have answered all your questions there. And I will take a fresh look again and after 4th of June when election results are out. Friends, the bond market's done. I now come to the Bank Nifty, which basically gained 1.86% on a week-on-week basis. It rallied on 4 out of 5 trading sessions, with Monday's low being the weekly low, which was never tested again. Now, the daily chart on your screen shows you that the price is above the monthly moving average, which itself is sideways to up. So the short-term outlook is positive as of now. Let's take a look at the weekly chart. On your screen, it tells you that there was a bullish piercing pattern which was seen last week, and that implies that the bulls are attempting to revive sentiments in spite of the selling pressure. The price remains above the medium-term moving average, so the medium-term outlook is also positive for now. The prior week's bearish power candle high was at 49,253, which must be overcome if bulls are to have a free run on the upside. The price remains within a bullish wedge, and that means the ranges might see compression before the ultimate breakout, and that could happen on or after 4th of June when election results are out. Take a look at the ratio chart that I shared with you last week as well. Now, this is updated till Friday. This is updated till Saturday, It tells us that the Bank Nifty underperformed the Nifty 50 yet again. And with 34.29% weightage of banking and financials in the Nifty, this sector it must, without fail, rally if the broader markets are to sustainably rally again, failing which you could see a pull-push effect. I have been writing in my live mint column that the Nifty and the Bank Nifty are like two wheels of a bicycle. If one is moving in the forward direction and the other is moving in the backward direction, the bicycle will topple. They need to rise together or else the market rally may not sustain. Now, friends, in the week before last, this index was number 2 on the most volatile counters list as per statistical beta rankings that we maintain in-house. It slipped 4 notches to number 6. That means volatility came down. Last week, I advocated a range between 48,825 on the upside and 46,000 on the downside, which held perfectly well. In the coming week, I estimate ranges between 49,525 on the upside and 46,700 on the downside. Friends, also please monitor our daily, weekly and monthly pivot levels that I share on our free Telegram channel. The hyperlink to my channel is at the fag end of this video and in the pinned comment and a description below this video as well. Friends, the Bank Nifty done. I now come to the Nifty 50, which rallied 1.86%. Like the Bank Nifty itself, it gained on 4 out of 5 trading sessions. And Monday's session saw the low that proved to be a weekly low, never to be tested again. The monthly, the daily chart on your screen tells you that the price is above its monthly moving average, which itself is sideways to up. So the short-term outlook is positive for now. Now, looking at the chart here, we see multiple bottoms marked by a blue trend line, which proved to be a support, which must be respected by bulls and protected in case of declines if the upthrust is to sustain. The weekly chart shows a strong bullish piercing pattern and the price being above its a medium-term moving average. So the medium-term outlook remains positive for now. Overcoming the prior week's bearish candle high at 22,589 is critical if the rally is to start the next leg in earnest. The blue trend line support at 21,780 is the area to be defended in case of declines. Friends, in the week before last, this index was at number 9. It fell 6 notches to number 15, which means volatility went down, or even individual stocks volatility rose faster than the Nifty's volatility, so the ranking fell. Last week, I advocated an estimated range between 22,550 on the upside and 21,550 on the downside. Note how the high was 22,525, barely 25 points below the expected resistance. In the coming week, I estimate a range between 23,000 on the upside and 21,950 on the downside. Here again, friends, please also refer to our daily, weekly and monthly pivot levels on our free Telegram channel. It will help you super time your trades better. Friends, I now come to the retail risk appetite gauged by the derivatives turnover contributed by the 4 segments. Now, the index futures segment saw contribution fall by 0.01%. It is shown as a blue line. Stock futures turnover contribution fell by 0.06%, indicated as a red line. Index options turnover went up by 0.11%, shown as a green line, and stock options turnover fell by 0.03%, shown as a purple line. Friends, futures demand a lot more by way of span margin. They ask you for mark-to-market margin. Volatility is higher. So when turnover in the futures segment has fallen, and in the options segment, the only place where turnover has risen is the index options, which are in terms of capital deployment, cheapest to trade. So clearly, traders are going long. Nothing wrong with that. But they are focusing on lower risk instruments. Do remember in that weekly turnover also we saw index turnover go up and stock futures turnover go down. Same here in the options, it's index option turnover going up and stock option turnover going down. So people are sitting on the fence waiting for 4th of June. Should you take the results as completely discounted? Hey, no, not yet. Don't jump the gun. Let's wait for 4th of June. Maybe you'll have to buy higher if you're a bull. Maybe you'll have to sell lower if you're a bear. But let's wait for the real thing. Friends, I now come to my strategy for the week ahead. And being a short week because Monday is a holiday due to elections in Maharashtra, I will prefer to trade light and continue maintaining my tail risk hedges in place. As we've seen in the data, the price may have gone up, but the statistics and market internals don't indicate a runaway buying frenzy. And I don't think there's anything wrong with that because ahead of elections, everybody would want to play safe and the markets are playing safe. I will seek theta decay opportunities in energy since oil and gas both are rising ahead of the OPEC meeting on 1st of June. But since prices are rising, the trades will be initiated after relatively bigger price moves. I'll calibrate my entries and take relatively less aggressive trades. Bullion, which I have been bullish on since many years, and I've been telling you that lower levels will see bullion garner support, jumped up, particularly silver, as I've been telling you in my videos. The hyperlink to these videos are below in the description and in the pinned comment. Please refer to these videos on where to buy bullion at best prices and the purity checks, etc. Now, base metal or industrial metal prices are running up on commodity exchanges. So, the possibility of metal stocks going up continues to remain present. But volatility in these counters and across the board, as a matter of fact, will be high. So, the rise in commodity prices, whether it's energy, whether it's bullion or industrial metals, everything is rising. Always inflationary. So this might prove to be a mild worry going forward in the weeks ahead because traders will start to get sober and start realizing that raw material costs are going up. PSUs will continue to remain in the limelight. By PSUs, I mean public sector undertaking, government company stocks, and they will continue to attract trader attention. Now, till 4th of June, I'm going to take nothing for granted. I will play it by the ear. I will let data decide and tell me where the market are headed towards, and then I will plan and take action. Whether you agree with this strategy or not, please let me know in the comment segment. Also, don't forget to share my video with smart traders and investors like yourselves. If you haven't subscribed to my YouTube channel till now, please do so and click on the bell icon to receive instant alerts about fresh videos being put about you. I thank you for your patience in being with me in this video till we meet again in my next video. This is Vijay Bhambwani signing off for now. Have a very profitable week ahead. Take care. Bye-bye.